Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Chainlink and its token link, conduct machine learning based price forecast, regression analysis, accumulation strategy, as well as estimated bull run target. None of the content is financial advice. Over the last week or so, Chainlink and its token link have been one of the rallying cryptos. Again, up by about 6.5% over the last 24 hours. Most of the cryptos are down. Again, these kind of analytics are available for on cryptoweeklies.com. Link on the bottom of your screen. It's all available for free. No signups required. Per this model, again, the machine learning based forecast for the next 6 months, the model says three things possible. Again, prices can do only three things, essentially: go up, down, or stay sideways. And this model again help understand what is, with respect to the probabilities and standard deviation techniques, what are the theoretical ceilings and floors. So the ceiling or the one standard deviation bull case for link in the next 6 months per this model is between $17 and about $29. Currently the price of link is at around $14, and if you look at in terms of the TA perspective, the first target, again, if we were looking at the Fibonacci levels as well as the 20-week simple moving average and 21-week exponential moving average for link, the first key level to watch for link, now that the price is above $14, is this $16.20, which represents the 0.23 fib level extension from or recovery from the bottom, from peak and per the peak to bottom drop for link between $52 and $5, less than $5 in the bear market. You can see that there was, in the first iteration, there was some resistance at the 0.23 levels, also at the 0.382 level, and in the 2025, the January 2025 rally at the 0.5 fib level. So each of the fib levels have historically for link represented a level of resistance. The first being at around $16.20, the second being at around $23, and the third at around $28. With keeping in pace with the area of confluence between the Fibonacci levels and the machine learning based price forecast, suggesting that in a non-euphoria bull case or one standard deviation bull case, the price in the next 6 months could see a ceiling between $17 and about $29. That's close to that 0.5 fib level. If on the other hand there is a euphoria in the market, the 95 percentile confidence or two standard deviation bull case for link takes the price between $18 and about $45. And if you compare that with the bull with the Fibonacci levels, that coming close to the 0.786 Fibonacci level from its previous all-time high at around $42.43. Essentially the two standard deviations ceiling goes slightly more bullish than that. So a top within the next 6 months for link per this model could be slightly a lower high from the last bull run of about 2021, when the price did go to about $52. So that's the bullish side of things. If the prices were to stay flat again between $15 and $17, that's what is projected. If on the other hand, if there is a continued downturn that link kind of had since about the early December of 2024, the price at a weekly level could have a support between $9 and about $13. These forecasts are also available on a tabular format at the bottom of your screen. All the information related to link is available on its USD pair on the homepage of cryptoweeklies.com under this row for link again, and also its Bitcoin pair related and the ETH pair related forecasts are also available for any pair related analysis. Again, today we'll be covering the USD side of things. The fair value per hour regression or the polynomial regression model for link is coming in at around $47. Again, this says that again there is a, per the model, there is a lot of room for link in terms of its upside potential. You can see this model did a great job of, if you apply one standard deviation residual to it, did a great job of identifying the bear market bottoms for link since about May 2022, when the price was sub $10 till about the $5 level coming in at around December 2022, as well as in July 2023 when the price did go close to that $5 target. Right now, for this model, the price is as undervalued as it was back in 2022 May to November. If we apply the regression framework to it, the one standard deviation residual kind of coincides with the $28 or the 0.5 fib level, and the machine learning one standard deviation peak for link at around $28, and the two standard deviation peak represents the fair value for link at around roughly speaking between $45 to $47, and coinciding with that 0.78 fib level at around $42 to $43. If on the other hand, if the market does go towards that blow off top phase, or the one standard deviation ceiling for link in that environment comes at around $72 per this model. So that's kind of the higher side of the projections. If we look at the simple moving average and the three accumulation related model, the DCA or the regression based model, the SMA based model, and the time weighted average price based model, we'll start with the simple moving average based risk model. This is price color coded with respect to the risk levels, and if we were to hide out some of the high risk targets, high risk price action environment, you will find that this model did identify a bottom close to this March correction also in August of 2024, when the price did go below the $10 level. Right now the risk levels identified by the model is slightly more than 20%, around 23%. If the hypothesis is that eventually in the high risk period of the market, this 50 to 60% risk level is and especially in the green color coded region, that's where the rallies eventually take the price action to. If there is a similar risk level achieved in the upcoming months, that price action for link could be somewhere between $31 and about $35. That's the range, the moderate ranges and anticipated or forecasted by this model. The higher end is between $36 and about $40, and anything above $40 is ultra high risk per the model. If we look at the DCA model, which takes into consideration the fair value that we just analyzed at a weekly candle level, for this model the risks have fallen down to about 1% now, and essentially per this model the price is in similar risk reward phase as it was back in between June to November of 2022, where the price did take a sharp fall from its fair value. Again, this fair value is an increasing function in the bull market. What I expect in the future months is that as the bull market peaks, there would be a kind of a flat or a rounded top on the fair value as well. Right now, again, the fair value coming in at around between $45 and $47. If per this model, again, if we were looking at the green zone where the bull market does eventually takes us between that 50 to 60% risk, per this model, that price for link is between $72 and $78 basically, or $83. So this is, again, we have multiple models, and an average of all the model will be discussed at the end of the video. The time weighted average price based model, this model did a great job in identifying the accumulation phase in the bear market, when starting from the time where the price started trading below the blue line, which represents the time weighted average price for link, also signaled a buy zone between August till late October of 2024. Right now the risks are fairly low per this model at around 36%, but again not as low as they were in the bear market. So this model, again, for high quality assets such as link, again being one of the top 20 cryptos for a while now, especially come the bear market, this model helps identify the accumulation zone for high quality assets. Again, not financial advice. Right now the risks are at around 30-35%. If they were to go back to that zone of about that green zone that we talked about, between 50 to 60%, what this model can forecast is again the last visit, that price action could be between $23 and $26. And if we were to go and summarize all of these findings, with an estimated bull run target for link, based on the risk reward analysis, the three models, if we weigh the risk based on the three models, the weighted risk comes at around 16%, or 0.16, with the current price at about $14.56. If we apply this logic and say that if link were to go to the highest risk, that is 100% risk, what could be the price? At that point, per the as a integration or amalgamation of three models, the estimated bull run peak for link comes at around $86, representing about 5.92x reward, or roughly speaking 6x reward from the current price. Again, this is assuming that the link price does eventually go to that 100% risk, but if conservatively speaking, a 60 to 80% of that could be somewhere between $48 and $64, roughly speaking. And with that, I would like to conclude the video by saying, again, coming back to the fib levels, the $16, $23 and $28, they do represent the cover the one standard deviation ceiling. The two standard deviation ceiling comes close to that 0.786 risk level, and again, and the 1.618, that $82 target, is kind of confluent with the the risk reward based estimated bull run target for link. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.